Imagine two people starting their investing journey on the same day. They both have the same amount of money. They both watch the same finance videos. They both want financial freedom. But 5 years later, one of them has built real wealth. The other has lost most of their money. What made the difference? It wasn't luck. It wasn't secret stock tips. It was one simple rule most beginners ignore. When people first discover investing, something strange happens. They suddenly feel like they need to move fast. They start watching YouTube videos. They scroll through finance Twitter. They read comments under viral posts. Someone says, "This stock will double." Someone else says, "Crypto will explode." Another person says, "A new company is the next big thing." And beginners start thinking, if I don't invest now, I'll miss the opportunity. So they jump in without understanding what they're buying. Here's the problem. Investing is not gambling, but when beginners follow hype, it turns into gambling. They buy companies they've never researched. They invest in trends they barely understand. They follow influencers who don't even explain the risks. And when the market drops, panic begins. They sell at the worst possible time, and suddenly, investing feels like a scam. But the real problem was never the market. The problem was the rule they ignored. Every successful investor follows a very simple rule. Never invest in something you don't understand. It sounds obvious, but very few beginners actually follow it. Understanding an investment means knowing how the company makes money, what risks it faces, why people buy its products, and what could cause the business to fail. If you can't explain these things in simple words, you probably shouldn't invest in it. Let's imagine two beginners. Person A invests in a company because it's trending on social media. Everyone is talking about it. The stock is going up fast. But person A has no idea how the company makes money, no idea about its competition, no idea about its long-term future. Now imagine person B. Person B invests in a business they actually understand. Maybe a company whose products they use every day. They know how it earns revenue. They understand its customers. They understand why the business could grow in the future. Who do you think will stay calm during a market crash? Person B, because they understand what they own. Understanding an investment gives you something powerful: confidence. When markets fall, confident investors don't panic. They analyze. They think long-term. They make rational decisions. But investors who followed hype feel fear, because deep down, they know they never understood the investment. And fear leads to bad decisions. Selling too early, buying too late, chasing trends again and again. If you're new to investing, start simple. Learn how businesses work. Study companies slowly. Ask basic questions like, how does this company make money? Why do customers choose it? What risks could hurt this business? You don't need to understand everything, but you should understand the basics before investing. Investing isn't about chasing the fastest profit. It's about making smart decisions consistently. And the smartest rule you can follow is this: never invest in something you don't understand. This one rule won't make you rich overnight, but it can protect you from mistakes that cost thousands. And sometimes, avoiding big mistakes is the real secret to building wealth. If you want more simple investing lessons like this, subscribe to the channel, because the goal here isn't just making money, it's learning how to keep it and grow it over time.